Good.
Okay, hello everyone. Today we are with Tom Culver, the CEO of PharmX, a company I really like. So we'll make him some questions. How are you, Tom?
Good. Thank you. Nice to meet you.
Great, great. Let's start a little bit with your background. I love to hear a little bit about that and what led you to PharmX and what do you enjoy about working at PharmX?
Yeah, great question. So my background is actually financial services as an industry primarily. Spent kind of over 25 years within financial services. I'm a lot older than I look. Um, and those roles kind of spanned across a number of things from working kind of client side in strategy teams, transformation teams, and then finally kind of product data and analytics teams, leading major transformation and data projects for one of the major wealth banks here in Australia for a number of years. I then set out and established a couple of my own businesses with some successful exits, and then joined PharmX now a little bit over 2.5 years ago. My background's, really in the last kind of 10 or 12 years of my career has been around platform product, customer growth, and in particular, an interest in data and analytics solutions within businesses. And what attracted me to PharmX was, anybody who's been out and built a business knows how incredibly challenging it is to build customers. Anybody can build products, but to build a customer base that is loyal, that is high transaction and high volume is incredibly challenging. As an outsider coming into PharmX, to be honest, to say I came from financial services, I'd never heard of PharmX. I didn't really know much about the pharmacy space in Australia or the healthcare space, but I looked at the business on its own standalone merits and said, this is a business with, in my opinion, an unrivaled network value that I'd never seen before. I mean, ultimately having, 100% penetration into a customer market is absolutely incredible. What the problem in the business is that it is a legacy business. It had issues around its platform and product solutions and its engagement models and issues around its revenue models. And those are things that can be solved over time, particularly if you have a very, very strong customer base that is very well protected based on the services that we offer. And, that's ultimately the business that we have today, and that's the journey that we're on today.
Okay, okay, great to hear that. And a little bit, let's make a quick introduction to the tech side of PharmX because many people might not know a lot about it. Are you cloud-based? And have you, because from my understanding, prior to you entering PharmX, the tech stack was a little bit outdated in terms of that you were not cloud-based and that typical old code that only one engineer can change.
Yes. Yeah, there was definitely an element of that. I mean, we moved to the cloud prior to me joining, but there has certainly been a significant number of enhancements and modernizations done since I've come into the business. Managing our legacy solutions is something that is very high on our agenda. Legacy technology obviously creates risk. It brings up cost, and it slows us down, and it slows down our ability to scale and to grow at a level of pace that we're aiming for. And so we have spent time modernizing a lot of our systems and our platforms, but really importantly, whilst maintaining our very high standards around availability and uptime. And so one of the fundamental roles of our platform in our industry is that we essentially facilitate the transmission of order flow between all parties. Now, what that means in kind of very human terms is that a patient or a customer can walk into a pharmacy, hand over their prescription, and then expect their medications to come back the next day once that order has flowed through. If our systems go down, if the order functionality in the industry goes down, then that patient does not receive their medications. Now, most cases that's fine, but in some cases where they are critical, life-saving medications, that can have a very, very serious human impact. And so we do take that element of our role in the industry incredibly seriously, and we focus a lot on stability. We focus a lot on security at the same time as being, a kind of forward-thinking, modern-based platform that's looking to develop quickly in a more kind of scale-up style.
Yeah, and understand that. I assume stability is probably your main priority there.
Mm.
And you've been growing your team recently. I saw in LinkedIn that you now have an interim CMO for some months. Has that transition went well for the moment, as you are in a pretty growth focus mode, especially in terms of customer penetration of your new solutions? Are you seeing any new problems of integrating new personnel on PharmX?
No, I mean it's one of my key passion points as, as a leader in a business. Building team and coaching team is an incredibly vital piece of what we do. We have grown our team fairly significantly over the last 24 months. We have had a turnover in staff. With a legacy business often comes legacy capabilities and legacy attitudes. And so a number of people who were in the business have moved on and been replaced by people with the capabilities and the skills and the experiences that we're looking for. And at the same time, the business has also grown. I would say the transition of bringing in the new people has been very effective, particularly at a leadership level, and then now expanding down through, particularly in the tech team, which is an area of growth, as well as implementing new divisions within the business. So marketing as one example, and data and analytics as another example of being kind of key functions that didn't exist in this business previously, but now do and are very well embedded in the core functions within our team. As to your kind of comment about having a transitional piece now as CMO, so our current head of brand and marketing is about to go on mat leave, and we've actually just recently brought on someone else. They are currently going through a transition period for 4 weeks. And then the interim cover will be with us between 9 and 12 months before our head of brand comes back. So again, we have the foresight to manage these things effectively so that we've got a smooth transition, we've got proper handover, and we brought in somebody with a really important set of skills that can help embed some of the things we need to do around growth and particularly product and platform focused growth. So it's we've taken the opportunity to make ourselves better during the transition.
Okay, understand that. Okay, no, I think we've covered the basics. We can go to the good stuff, the marketplace.
Yeah,
I think it's
fantastic.
what everyone is debating about. So after doing some deep research, like you have deployed like two versions of the marketplace. We say at version 2. Version
Mhm.
1 failed. Why the first version of the marketplace didn't work, and what you have learned from that experience in order to make the second one better?
Yeah, great. I mean, we don't have a huge amount of time, so I'll try and keep this brief, but I could talk about this one for a very long time. Yeah, I think you're absolutely right. Like, we classify the first version of the marketplace as a failure. It was a product that was built with very, very poor fundamental principles. The technology was badly executed. The product strategy was not clear, and ultimately we built a platform that was supposed to work for everyone, but ultimately delivered little value to anybody. And there's a very classic product-based mistakes. And so whilst the platform gained traction, we had a number of customers. We had almost 2,500 pharmacies sign up to the platform. We saw very little usage rates, which was really an indication of two things for us. One is that there was clear appetite from the market that actually this was a solution that was required, a lot of desire there, but actually it came down to the execution of the platform build versus anything else. And that really what led us to double down and lean into essentially a version 2 of the platform. So ultimately, there's some fundamental and critical differences from a technology perspective and a product approach perspective. And there's also some fundamental differences in which customers we're targeting and what we're doing to target them, or what problems we're solving. So the from a platform and product perspective, I mean, principally the previous platform was built by an external team and managed by an external team and had no connection into our gateway platform or our data services. That has been changed, and so the platform has been built internally on a modern stack to the standards that we have. But really importantly, it now forms part of what we call our single platform. So this is the integration of our EDI platform, our data platform, and our marketplace into one. Now, that gives us a huge amount of coverage from our customers' perspective. It gives us a huge amount of coverage from our suppliers' perspective, and it gives us a huge amount of knowledge and insight from a data perspective. So we can understand transmission and transaction history for almost 20 years of our pharmacies transacting through our gateway, now applying some of that insight and that knowledge and that capability into the marketplace. And how that manifests, as an example, is building a marketplace that from day one has automatic ordering capabilities. So we already know what a pharmacy typically orders because we've seen it being ordered for however many years previously. Now being able to automate that for a pharmacy so they can come into a new platform and do that in one click. That is enabled by this kind of principal shift of bringing the platforms together. More importantly, however, is the problems that we're looking to solve for pharmacies. Prior to us commencing any work, I mean, in fact, prior to us actually even committing to develop a version 2 of the platform, we conducted some fairly rigorous market research, which was both quant and qualitative research across the industry. And from that, we learnt some very clear problems exist for pharmacies. We learnt as well that these problems were not effectively solved in the first version of the platform. And then thirdly, we learnt that we were in a very strong position to be able to solve these problems. And so if we think about the day in the life of pharmacy and what those problems are and how they manifest, it comes down really to their frustrations in their ability to order, so their frustrations with current capabilities, their lack of confidence and conviction in current capabilities, and then the time and money spent on managing something as simple as ordering. So ordering has been identified as the number one pain point for pharmacies in the industry. Typically, they order from between 7 to 11 different points every time they place an order. On average, a pharmacy is ordering twice a day, and they're ordering in the range of around $2 million worth of goods per year across the industry average. And so what that means is that a pharmacy is sitting there ordering through typically their point of sale system. They're ordering through direct platforms. They're ordering through their reps. They're ordering via email. They're ordering over the phone. And in some cases, they're ordering still by fax. As hard as that is to believe, you may not even know, Hugo, what a fax is, but it still exists here in some rural parts of Australia. And so, pharmacists are sitting there going, we have high value businesses with high volume turnover, yet we spend an inordinate amount of time on ordering. The fundamental problems that they have, and one of the core reasons why they spend all this time and go to all these different points, is that typically when they're ordering, they're not given access to accurate pricing. They're not given access to availability of stock. So they often, at a rate of about 40% on non-medicinal items, can place an order, and 40% of the time it's not fully fulfilled the following day as it's supposed to be. So 40% of the time, a pharmacy is waking up expecting something to be delivered, and it either gets delivered either as a part or not delivered at all. there's very little capability for a pharmacy to do any kind of comparison and find alternative products. And so when you think about that out of stock rate, being able to find alternative solutions is really, really important. And then lastly, pharmacists are running a business. They're there for profit. Yes, they play a role for community, but ultimately they're there to pay their staff, and to grow their business and to grow their wealth. And so margin is incredibly important, which means price is incredibly important. And so their inability, sorry, today to be able to find deals, promotions, competitive pricing makes it very, very hard for a pharmacy to operate. Ultimately, what that means is we're looking to build a marketplace which operates as a one-stop shop for the pharmacists, meaning that they can have high conviction in their order. They can access their entire range, which is a really important facet that wasn't considered in the original marketplace or the version one. They have confidence in pricing. They can find alternatives. They can get access to promotions. They can save time and make more money.
Okay, I understand that. But in terms of the pricing, because here the one who pays is the wholesaler, the supplier. In the traditional model, they pay for connection, but now you have bundled into the same platform lots of solutions. Do you
Mhm.
are you still billing them in base of like different fees for each service, or are you bundling everything together on a percentage based?
Yeah, great question. So I'll just clarify one piece first. When I talk about pricing, I mean the price that a pharmacy pays for a good. And so what that means is that a pharmacy today, typically they will order something without knowing how much it's going to cost them. So that's like me saying you go to Amazon and buy I don't know, a water bottle, but nobody tells you how much it's going to cost.
Yeah, I
No,
understand
yeah,
that. I
yeah. So,
understand
so
that.
just want to be clear on that. In terms of our revenue model and how we generate
Yeah.
fees, yes, there is also a change there. The point at which we generate revenue from hasn't changed. So we charge suppliers. We do not charge pharmacies. Suppliers generate revenue for us. Um, Traditionally, that has been on an account fee basis. So um, every time a pharmacy transacts with a supplier across our platform, that supplier would pay us a monthly account fee. So that pharmacy could trade once for $1, or it could trade 1,000 times for $10 million, and we get the same account fee. Through our marketplace and under our single platform principle, we now have moved our revenue model to a percentage based of trade, so a volumes fee basis. So since July this year, July 2025, all new suppliers who've joined our platform are on our new pricing model, and we are currently converting all our current incumbent suppliers onto the new pricing model as well.
Okay, and I have a question there on one of your major clients, which is Paragon and CH2. You
Mhm.
signed that client 2024. Are
Yep.
you converting that one into the new revenue model?
Yeah, so they came on as an early partner under the new revenue model. So they are already on that revenue model as part of the marketplace. They are, they were a real, I guess, a demonstration for us of getting success with a wholesaler on the marketplace. It was the first time that A, we had a wholesaler, and B, that we were able to distribute medicines through the marketplace. And so far, that has been proved to be a solid success. And we're now in the process of trying to convert some of the other wholesalers onto the platform as well.
Okay, understand that. But what I don't understand is Paragon is a quite big corporation. I think it's around, correct me if I am wrong, but around 3 billion in
Mhm,
volumes.
mhm.
Like, do all their volumes flow through the percentage-based model, or some of them are not captured in that way? I do not completely understand what's the split there.
Yeah, so Paragon as well, we just need to be a little bit careful because
Okay.
Paragon is a manufacturer as well as a distribution wholesaler. And so typically we think about CH2, which is the wholesaler distribution
Okay.
platform in Australia, rather than Paragon as the larger entity. And yes, so their products now distributed through our platform are on a percentage-based fee. They are on I guess, an introductory percentage-based fee versus our kind of standard market. We did that intentionally as it was the first wholesaler. But yes, what we receive now through the single platform is percentage-based volumes.
Okay, and do you charge only if the transaction is done through your platform or also through the gateway?
Yeah, so with that business, so if it's originated through us, so if it comes through our single platform, or if it's originated directly through us, say through a rep order, then it's charged that way. If there are orders being originated, let's say, for example, directly on the CH2 platform, we still manage some of those transmissions, but we don't charge for them in the same way.
Okay, and I understand that I had some doubts around that point. And
Mm.
therefore, what ends up driving the revenue is more pharmacies using that portal, and when you order through the portal, you
Mhm.
basically get gated through the marketplace and you get that fee.
Correct.
Okay.
Exactly right.
Also, I after some research, I noted that you are embedded into Buy It Right, this solution that allows some pharmacies to automatically buy some orders. Is that correct?
So yes, so we Buy It Right are a customer of ours on our gateway. So they are a standalone business that does automatic order replenishment on behalf of some point of sale vendors, and we process their transmissions through our gateway platform. Buy It Right is certainly a business that we would like to work more closely with through our marketplace, but at this stage, they are an EDI customer.
Ah, okay. The orders are not routed through the
No,
marketplace. Okay,
correct.
okay, and understand that. Okay. And in terms of, I don't know if you can talk about this, but the percentage that you charge, does it vary depending on the size of the customer, the relevance of it, if it's a supplier or if it's a wholesaler? How do you go around that pricing and negotiations with customers?
It does certainly depend on the size of the customer. It also depends on the type of product. So in Australia, we have essentially a couple of categories of product as we think about it. So there's medications, which are then or prescriptions, which are split into two. So there's a PBS medication. So that is essentially government controlled or regulated. So they regulate the manufacturing costs, the sales costs, and ultimately the margin that can be made on those products. They also set rules around accessibility and delivery, so it has to be delivered within a certain time frame in metro areas and another time frame in regional areas. We then have non-PBS medications. We then have what we call behind the counter or, sorry, OTC, over the counter medications. So these could be things like a very strong flu tablet. And then we have things that we call retail products, everything that's in the front of shop.
Yeah.
Now, across those different range of products, there are different margins and there are different suppliers. So on PBS style products, we will have a much thinner take rate because there is a controlled margin. On a retail product, for example, it would be a higher take rate because there's a greater margin and also depending on the supplier and the negotiating power.
Okay, okay, understand that. So on the growth strategy for the platform, you stated, I think, in your AGM that you were looking to this year to add a cohort of sub 200 pharmacies. You said the
Hmm.
average ordering volume was around 2 million on this one,
Hmm.
so I assume they are on the smaller independent side. How are you thinking about that growth model this year, and how do you approach it in the coming years?
Yeah, so the principal thing that sits behind that growth model is our ability to provide the range that those pharmacies want to order. And so I talked earlier that we were able to determine and see previous ordering patterns and ordering histories. And so we know what each pharmacy orders currently. And it's about being able to translate that into the marketplace platform based on the number of suppliers and the range of suppliers that we have. And that then defines the cohort that we are targeting. Now, that approach to market is essentially dual strategy. So we have obviously digital marketing and marketing teams, which is through I guess, activating both paid media and then our owned media, so email journeys and comms journeys. And then we have our sales and customer success teams. And around that, we also do a number of things like run events, co-sponsor items, and events that are important to those pharmacies to raise awareness of the platform, as well as do demonstration evenings and have community channels as well to drive traction. In terms of, I guess, the early success measures of that, and again, I won't go into too much detail here because we'll do some of this in our half-year reporting. But our first month of transmissions on the new marketplace far exceeded what we had ever achieved on the previous platform. We have a number of customers who are already ordering over 90% of their orders through our marketplace platform versus their previous ways of ordering. And then broadly, we've seen the average order value per pharmacy from month one to month two of the launch of the platform increase by a fairly strong percentage. So we know now that we are able to onboard pharmacies effectively and efficiently. We know that in the right target cohort, we are able to convert those pharmacies to ordering significant portions of their order, and that is growing over time. And that gives us confidence that as we head towards the end of the financial year, we'll head towards that target of around the 200 stores and that transmission flow.
Great, great to hear that. And what's the main we could say blocker that stops pharmacies uh, increasing the number of orders? In some cases, some examples that could make a pharmacy not use your product, and in which cases the pharmacy will benefit a lot from using your product.
Yeah, I mean, at the moment, I mean that's a fantastic question. At the moment, it comes down to trust and behavior change. We're very confident that in our target cohort, there is very little reason for a pharmacy not to use the platform. And as I say, we've had some demonstration from that from some of our early adopters. What we have seen and what we're learning from some of those other pharmacies is that it's about familiarity and trust. If they are ordering significant levels of product, they want to be able to trust the data in our platform capabilities, etc. And as they get more familiar and have greater levels of trust, then we're starting to see those order flows increasing, at which we're already seeing outside of our main cohort, we don't expect to be able to get to those kind of high thresholds of kind of 90% of their order flow, but we do anticipate and also an increase in the percentage of orders that we capture from those stores. Now, those stores will have slightly different motivations. Typically, we call kind of our secondary cohort, that we call them price seekers. So pharmacies that are looking for either more accurate pricing, alternative offers, because something they're looking for is out of stock, and promotions. And so they're there on a more ad hoc basis when they can't find something or they want something at a cheaper rate, and we're essentially there as that comparison site. That will change over time as we bring in the other wholesalers and we can get to that level of 90%-ish of range, which means then the cohort that should be using our platform as their main platform increases.
Understand that. And I had a little doubt around the market because there are big franchise chains of pharmacies in Australia, for example, Chemist Warehouse and others related to that. Would
Mhm.
a franchise like that use the PharmX portal, or is that outside your cohort?
No, it's certainly an intention of ours. So we don't have any of the large banner groups currently prescribing that their pharmacies have to use it. We have a number of pharmacies who are part of large banner groups who are independently making a decision to use it. And so we expect that to grow over time. We are also developing some additional capabilities that better suit these large groups. And so we call these head office capabilities as a broad term. And so what that requirement is that a head office or a pharmacy banner group, they want control over the catalog over which somebody is allowed to order from. And then they want to be able to capture data around compliance to that catalog. And so we're building some of those capabilities, which will then encourage some of those dealer groups to, I guess, prescribe it out to their stores.
Okay, understand. Because as far as I understand it, the first marketplace had like the intention to become another wholesaler, like a smaller one where you could order differently. And the current marketplace and platform is more like just value add software to the
Yeah,
ecosystem.
correct.
Do you rely a little bit on having suppliers and wholesalers list their data on your platform? And that would present a risk if the you are trying to take market share away from them. Are you seeing right now any pushback from them, or and what you might do if you get this pushback in the future around that they don't want to share that data with you because their
Mhm.
margin is being reduced?
Yeah, I mean, right now we're not seeing pushback. I think there's a couple of things here. I think the original positioning around us potentially looking to be a competing wholesaler, whether that's a virtual or a digital wholesaler, that was of concern to some of the wholesaler and supplier customers. So our move away from that to be purely an intermediary in the marketplace has certainly reduced some of those concerns at a competitive nature. Um, from a future perspective, we believe that the value that we are adding to the pharmacies is so critically important that we're able to change the point of ordering, and that gives us some leverage. And then secondly, if we think about the suppliers and their motivations, suppliers in a what we would think of in Australia as a confined market, we have 6,500 pharmacies. Our population growth is slow. The number of pharmacies in this market, the growth is going to be very slow in the very low single digits every year. And so suppliers are not looking at growth of the industry as their opportunity. They're looking for increase in market share as their opportunity. The second opportunity that they are looking for is creating efficiency in their supply chain. Now, these are two things that through our single platform solution, we are able to assist with. So when we do talk to suppliers and particularly our existing legacy customers about the change in pricing, we're always looking to add more value back into their business by helping solve these two fundamental problems. It is a value exchange that we're trying to create between our parties versus just simply trying to charge them more. And at this point, we're certainly getting very positive receptions from the suppliers in our ambitions to help their businesses be better, as well as help the lives of the pharmacies be better.
Okay, I understand that basically you're offering a reduction in cost and a slight increase in the fee, but what cost do you mainly reduce for the suppliers?
Yeah, so if we think about what a supplier business is, it's ultimately a supply chain company. They are responsible for collection of goods and then the distribution of those goods. And where they are held accountable is the efficiency and the success of that distribution channel. So are they receiving and completing orders at an effective rate? Are they fulfilling orders at an effective rate? Are they processing orders from manufacturer down through the supply chain to customers at an effective rate? All of these things, when we can create opportunities for optimization or efficiency gain, have fairly significant impacts from a profit or a revenue and a profit perspective at the supplier level. And so, what this might mean is, for example, talking to a supplier about the lost revenue that they may have experienced through ineffective data management, ineffective product categorization, and ineffective targeting. So we see this through our data, and then we can help them solve some of those problems both through a data management perspective, but then also a distribution perspective. So yes, we do. We take a higher fee on the transmission or the transaction, but we are looking to add more value back into their businesses, which should be significantly higher than their hit on margin.
Okay, understand that. So under that way of viewing it, do you think you can add the major wholesalers into your platform?
We certainly hope so, yes. At this point, we have no reason to think we cannot.
Okay, okay. Understand that. Let's touch a little bit on competition because you'll
Mhm.
mainly have two small competitors. Directo, I think it was more of a competitor from your previous model. It's not similar to what you are doing right now. And on the gateway, you have Medby.
Mhm.
What are you thinking about this competition? Do you see them as a threat?
Um, Look, we're always very, very clear and cognizant of competition in the market. We encourage choice, we encourage competition for our customers, but ultimately we believe that we're in the best place to provide the best services that we can. Now that comes from two places. Ultimately we have an incredibly strong network and the efficiencies in this industry and the ability for this industry to scale is based on that fundamental requirement for a complete network. As soon as that network is fractured or disintermediated by anybody else, the value for all parties decreases. And so we're very confident that, for example, when MedViewX being the competing EDI platform, their ability to take significant ownership of the network is very, very challenging for them because there are very few benefits from either the supplier or the pharmacy in operating with MedViewX versus a network platform that, like ours, has a history of high availability, high success, and low pricing point and driving efficiency into their business. So yes, we're aware. We're always aware of disruption, but at the same time, at this point, we're not overly concerned. We see the owners of MedViewX, which is a company called Fred IT, very much as partners of ours. They are customers of ours. We transact their data across our platform, and we are increasingly looking for ways to work more effectively with them and their business. As we think about Directo, Directo is an interesting one as well because they are both a customer of ours and a competitor of ours. So they transmit their information across our network and our platform. And so they're a customer of ours, so we want them to continue to do well because we generate revenue. But they do compete directly on a marketplace still. Now, where they compete, which is slightly different, is actually some of the future capabilities. And going to your earlier question around the dealer groups or the banner groups. So Directo does a very good job of working with some of the groups to facilitate ordering through their pharmacies where they have success with the groups, it then just translates to them having a very low penetration rate with suppliers and the pharmacies. So typically what we see is that through Directo, pharmacists are ordering from a select few number of suppliers rather than all of their stocks and goods. So we still know that we have a competitive advantage over Directo in the capabilities and the supply network that we have. I think ultimately with Directo, I think there will become a time in the not too distant future where either we will maybe look to combine our businesses or they will stop becoming a customer of ours as we're ultimately enabling them to transact across the industry, which we're not
Yeah.
obliged to do.
Okay, understand. And any reason why Director was able to get that position and facilitate that transactions
Mm.
with banner groups? Anything you can learn from that and apply into the business?
Yeah, absolutely. Certainly have learned from that, and it's absolutely part of our forward-looking development roadmap, and it's what gives us confidence that we know that we can target that portion of the market as well.
Okay, okay, understand that. And then two last questions. On the analytics product, how are you
Mhm.
thinking about that? Because I know that the stock view is basically free. It just adds so much value to the platform and it gets the pharmacies to use more the product. But the analytics are for the suppliers and wholesalers. How are you pricing that, or are you also offering it for free in order to get that percentage-based model?
Mm. Yeah, it's a bit of a blend, so this isn't a straightforward answer. So we have pricing structures around our data and analytics models. And so we essentially have a couple of models. We have what we call a data as a service platform, and that is basically giving our customers, in particular suppliers, access to our data platform. We provide them data and analytics support services, particularly for the kind of the middle tier supplier, which is high volume but probably low sophistication when it comes to their operations in the business. We support kind of internally with data solutions. We also then provide kind of a more typical platform solution. So the ability for pharmacies to access free data, and then if they wish to go to a paid tier, then they are able to do so. And then we also offer more standardized usage models. So if somebody wants to get access to a one-off report, they can pay a one-off fee. If they want a ongoing data feed without the use of our platform, then we charge them usage fees depending on the type of data, the amount of data that's transmitted. Now, saying that, to the points that I was making earlier, obviously data is a huge portion here, and it's a huge element of the value add that we're able to provide to some of our partners. And so, in many instances, it acts as a loss leader for us to bring that supplier into our broader network, where we generate the revenues through percentage models.
Okay, I understand that. So it's just another selling proposition, you could say. It's a value add with the
Yeah,
main focus
correct.
on getting the orders initiated through the platform, get more volume through there, put more SKUs on the catalog, and adding so much value to pharmacies that suppliers and wholesalers end up having some cost efficiencies going through you also and justifying the percentage-based model.
Absolutely. We do anticipate that our data analytics proposition will be, a standalone revenue generating, profit making entity over time. And that path has started. But at the same time, it's an opportunity for us to use it to support the broader strategy around conversion ultimately of our business model.
Okay, understand that. And then final question, I promise.
Mhm.
Uh, what are the top milestones? If we look the next 3 years for PharmX, what are the top milestones in terms of the tech, the product, and the adoption? And then financials. No, I am not asking for guidance, just some uh, uh, wide numbers.
Yeah, yeah. I mean, it is a tough question for us to answer because we don't provide forecasts or guidance. But certainly, if we could have many, many hundreds of pharmacies transacting through our single platform at very high volume thresholds, it's certainly a success driver for us. If we think about broader growth than that as well, it's the our data and analytics platform becoming a standalone revenue generating and profit center within our business. We think more broadly than that, it's about the growth in the suppliers across our network. We're currently at just under 200 suppliers. We have ambitions to be working with anywhere up to 500 suppliers, we think is realistic over the coming years. And then if we take a more broad view than that, it's our capabilities and our options to be operating within pharmacies in different markets with our partners. And so we started that strategy last year through the expansion into New Zealand. We certainly look over the next couple of years at opportunities for us to be expanding into other regions as well with some of our partners.
Okay. And what do you need to achieve that? Do you need more people, more sales team, more people in tech?
At the moment, we're very well resourced. We increased the size of the team to develop platform and product, but also to make sure that we could support the growth of the business, and achieve what we want to achieve over the next couple of years. If we are looking to accelerate any of these opportunities, or if any of these opportunities, particularly around international expansion, materialize more quickly, that would lead us to need to grow. So for example, if we want to establish operations in another region, we are going to need people on the ground to ensure that that is well supported. So that would lead to another expansion. But right now we're in a very good position. We're cash generating, we're sufficient. We have increased our investment in our platform, but we certainly expect to see the returns on that investment starting to flow through towards the end of this financial year and into next financial year.
Okay, great to hear that, Tom. I think we went really deep into this call. Thank you for the complete answers. Looking forward to learning more about PharmX in the next half year report.
Fantastic. Awesome, Hugo. Great to meet you. Appreciate the chat.
Thank